Public opinion and action matters. And nearly every day, someone is researching, polling, or surveying the financial world to see how investors feel, retirees plan, consumers spend, and savers think.
I'm busting with news.
That fact-finding can help you figure out where you fit in.
You are exactly the guy I want to talk to.
Or don't fit in with the rest of the financial world.
Maybe I'm not the guy you should be talking to.
So whether it's the latest academic research, analysis of investors, or poll of consumers, you'll benefit from hearing from experts behind the studies.
You say expert. I say geek.
As MoneyLife looks at what the
survey said.
How do I get? Yes.
Welcome back to Money Life. I'm Chuck Jaffe, and I'm joined right now by George Walper Jr., president of the Spectrem Group, and we are taking a look at, well, some research that the Spectrem Group has done, and it may strike you as a little unusual, but we're looking at the confidence of millionaire investors. Yeah. I mean, on some respects, you'd think, hey, millionaire investors should always be confident, but they're not. And Spectrem keeps the Millionaire Investor Confidence Index, also the Spectrem Affluent Investor Confidence Index, and both of them declined significantly in January, getting to their lowest levels in about 3 years. If you want to learn more about it, Spectrem, which is Spectrem, Spectrem.com, millionairecorner.com, and George is on Twitter. He's at GWalperJR. George Walper Jr., welcome to Money Life.
Thank you, Chuck. How are you?
I'm well, but, you know, when millionaires are nervous, I'm a little conflicted. I don't know that I shouldn't, you know, how worried should I be about the millionaire set? Or maybe is the idea here that when millionaires are nervous, well, the rest of us who aren't millionaires should be going, wow, it's really time for me to freak out.
Well, millionaires do get nervous. Millionaires are concerned about what's happening in the market and what's happening in the economy. What's interesting is we've been doing this research every month since 2004, and millionaires, which are a million above, as you would intuitively think, and the affluent index, which is the broader market of 500,000 above. But millionaires tend to be always a little bit more optimistic about a number of factors than the affluent market. And in January, when we did this research and the results you talked about, where they did drop significantly, there's no question it's related to the market volatility in January. But millionaires in general are more sophisticated investors. About 85% of them use advisors. So when they see the market move like it was doing in January, and they see that the volatility is there, that they tend to get very concerned. So they tend to pull back a little bit. We always ask, so how are you going to invest the next 30 to 60 to 90 days? And not surprisingly, a pretty high percentage of them are increasing their allocation in the short term, meaning on the sidelines. And the subcomponent, which we can talk about as well, is what do they think about their own household outlook, about income, about their business, if they're a business owner, about their occupation, if they're working for a company. And those are really, really concerning in terms of the way they dropped last month.
So let's talk about that. Why concerning in terms of the way they dropped last month? And again, you know, you talked about the fact that millionaires have the resources to be patient investors. So
they are patient investors. However, when the market acts like it did in January, if it doesn't come back pretty quickly, they really take a pause. So if you think of last August, when it was pretty volatile for a little over a week, if I recall, and a lot of it was driven by some reaction to some activities in China and their market. Because it bounced back pretty quickly, millionaires felt better in September. And I think we'll be a month from now, we'll see where they are at the end of February. My suspicion, unless the market really creeps up again consistently, is we'll see them at this same level. But when you look at the household, in all these numbers, I always say, gee, one point in time is an important number, but let's look at a trend. Their outlook for how their overall household is doing, as I said, how they feel about their own economic outlook in their house, their income levels in their house, has been trending down now for a year, which is quite interesting because last year the market was up significantly. So this is an area where when we start seeing millionaires concerned, what happens? You see a couple of things. These folks have a lot of discretionary money to spend, so they might start pulling back. They also are quite a high percentage of them, about 20% of them are business owners, which creates jobs, and another high percentage are senior corporate executives. So if we see this continuing for 3 or 4 or 5 months in a row, both the overall index dropping, but also after their household outlook, you will start wondering, will companies start retrenching in terms of hiring plans, et cetera? So, I mean, the next few months are kind of a critical point, we think, for how this year will turn out.
Although we're at the lowest levels in 3 years, we're not in really bearish territory in terms of the sentiment here.
No, not at all. We're nowhere near where it was in 2009 and the fall of 2008 by any means. But, you know, as I said, it's all about trending in terms of where they'll go the next 6 months.
And in your experience, if we see a move as sharp as we have, what would, you talked about the next 6 months sort of being critical. What would it take to change things and keep, stem the tide that we've now seen turn here?
Well, that is interesting. I mean, clearly the market either stabilizing, and that doesn't necessarily mean rising rapidly again, but just stabilizing. Throughout last year, there was concern about what will happen when the Fed increases interest rates, and the Fed finally did that. It wasn't very significant of an increase, and now the question is, will they slow their strategy down for this year, meaning the Fed? So millionaires look at symbols like that, and they say, if we're starting to see the economy, slow down, the recovery, et cetera, what they will do is they will be on the sidelines. It doesn't necessarily mean that they will leave the market, but they won't put more money in the market. And that drives a lot of things that could drive the economy. So the millionaires tend to be a good proxy for what's going to happen down the road, because they do control such a pretty significant amount of wealth in this country. Yeah.
Well, when the millionaires are nervous, the rest of us, maybe we should be considering our fortunes as well. George, I hope we get a chance to chat with you and see how this plays out later this year.
Thank you. Look forward to it.
George Walper Jr. is president of the Spectrem Group. If you want more information, it's spectrem.com, millionairecorner.com, and George is on Twitter at GWalperJR, and you can look for more updates on what's happening with the indexes as the year goes along. Off to a great start on today's show, but that just means there's a lot more to come. So settle back and relax. We're living the money life, and we'll be back in a moment.